I'm Michael Fox, and this is the Prospector Podcast. And I have joining me today, I have Alan Oshiki, who is the managing partner at Pushtree Developments. Welcome to the podcast, Alan.
Thank you, Mike. Good to be talking with you, as always.
Yeah, you and I go way back with our partnership with the New York chapter of the SME, who's going to be having a conference coming up pretty quickly here in May. You and I have sat on many a communications panel and talked about challenges with our industry and communicating. And I thought this would be a good chance for us to do a podcast on that very subject. But before we get into the podcast, let's explain to people what Pushtree Developments is and what your role is within the company and the industry.
Well, thank you, Mike. At Pushtree, we do a combination of things for clients. We're a consultancy, and we help companies with strategic communications as well as certain aspects of corporate development, strategy definition, operational problem solving, that sort of thing. My background is I'm a mining engineer, spent quite a bit of time in the industry and have since worked with companies in a variety of industries, untangle some of their issues, particularly with strategic communications, crisis communications, operational issues, things like that. And despite my work in a wide range of industries, I always come back to the mining industry since it's where I began.
Yeah, it's probably for communications, it's a good place for you to be because we as an industry are notorious of being poor communicators in a lot of senses. But this all goes down strictly to the caveats that I have when I'm telling investors what to look for in a company. I always go jockey, horse, track. The jockey being management, the horse, the project, the track, the jurisdiction. And communications is very similar because jockey being the management, there's management that believe in communications, are good at it, and then there's management that leave a little bit to be desired. So is that part of your findings as well? Is this a management thing?
Yes. In fact, having been talking with investors for over 30 years during the course of my work, both as a consultant and a corporate officer, the first thing that any investor, whether they're retail or professional institutional investors, the first thing they look at is management. Are they credible? Are they realistic? Are they effective? Do they have a good track record? And when it comes to explorers, which your audience, I'm sure, looks at a lot of those, the biggest question you have to answer is, has this team made investors money? And you look at who's in charge, who's making the decisions, you look at their advisors, kind of look across the whole range of leadership of a company, and the management is the quality of the management is absolutely critical.
Yeah, no, absolutely. You want to put a jockey that's won a lot on a winning horse for sure, but again, it's about the communications. So part of this is about how well does management take their plan and make it understandable so investors know where the company is headed, why, and how they're getting there. Like, do they, how key is it in your mind that they lay out that roadmap so that people understand what's happening?
Absolutely. And, among the things that I recommend to my clients is, first and foremost, be sure that you are managing market perceptions. That goes to the roadmap idea, Mike. And are you being realistic? Are you providing a narrative that takes investors from point A to point B over time? Are you maintaining an outlook for future returns? At early stages in an exploration company, that's pretty difficult to do, but it can be done. And the management team has to be very cognizant of what it is they're trying to do. One of the things that I tell companies is that data does not equal a narrative. Just because you have drill results does not mean that investors seeing a press release with 3 pages of drill hole data are going to be able to piece all that together. You have to be able to provide a full narrative around that. And over time, if you're effective as a communicator, you establish a broad, informed base of followers. These could be retail investors, they could be sell-side analysts, and other market participants and commentators. Very important to build that and think in terms of the long term and the narrative that you're giving to the market. And that narrative has to be complete, it has to be full, and it has to be realistic.
It's surprising how many, when I'm talking to investors and I'm talking to the company, I find it remarkable sometimes that what the company thinks that they're saying isn't what the investors are hearing. And at times there seems to be a disconnect. And
Yes.
generally when that happens, I've also find that at the first sign of trouble, the investors flee.
That's right. And if you think about good communication, and let's talk about investor communications, think of a Venn diagram, 2 circles. One contains all the information that management has about and its board has about the company. It's, a complete knowledge set, or as complete as it can be. The other circle contains what the market perceives to be or believes to be or understands to be the content of that management knowledge set. Good communication ultimately brings those 2 circles together, and then again thinking about a kind of Venn diagram, such that the overlap is everything that is publicly known about the company that comes from the management knowledge set. The only difference should be the insider information that management and the board have that is not yet public. If you're communicating well, you are bringing those knowledge sets together in a fashion that the external perceptions are as complete as they can be. And there are ways to measure that, but that is the ultimate goal and something that companies need to keep in mind. I mean, if you do that well, who you talk to, what you say, what others start saying about you, if you're capturing market interest and impact, you're differentiating the company and its investment narrative, and you're creating demand for your equity securities ultimately. But it's a process. It takes time and diligence and effort.
And more importantly, you don't want to be surprising your marketplace. You should be telegraphing what you're going to be doing, and it should make sense to the investment community. Otherwise, things are going to come off the rails really quickly, either on an upside or a downside if people are caught by surprise. And generally, it's a downside, not an upside. Case in point, the last several weeks, you've had the government in the United States propose tariffs on everything and everybody, then back away from that, then repropose it, then back away. And the markets themselves have been taking these massive 1,000, 2,000, 3,000 point swings based on the communications coming out of the White House. And that, in my mind, is an example of a poor communication strategy, and that nobody really understands what's happening and why. And let's take that now down to the micro of a mining company. If a mining company were doing that, that would be a recipe for disaster.
It is. And I have seen that happen in cases at various points throughout my career. And it usually comes from a leader, a CEO, who has a very kind of mercurial personality. In one meeting, they're saying, I don't want any sell-side analysts following us. I hate them. The next meeting is we've got to get this sell-side analyst on our side. And oftentimes that kind of mercurial personality just doesn't make it to daylight. The problem in the Trump case now is that he's unrestrained. There's no one there to say, stop, wait, listen. He simply just speaks from off the cuff, which you can see very easily what the result is. And gosh, we could talk for another hour on another podcast about my views of the current situation. But yes, you can draw parallels to this. And it's interesting you mentioned the market reaction, because that's exactly what is a form of information to our current administration. It is the same way for a CEO. If they get out and talk about, I'm trying to think of situations where they just had a great quarter. Okay. And this is a company with earnings. It's not an explorer, but they just had a great quarter. And then they say, but we're cautious going into the next quarter and a little more cautious about the year because the stock falls. And the CEO will ask me, well, what the hell? We just had a great quarter. Why is the stock down? I said, because you mentioned a lower outlook. And this goes to a point that I also want to make, is that it's not just about past performance. That matters when it comes to reputation, but when it comes to value, it's all about the future. And you have to have a clear view of the future, and that has to be part of your narrative, and it can't change day to day.
Yeah, Rick Rule often says when he's talking to companies, what he wants to find out is what questions do they have that are looking for answers, and how are they going to go about finding those answers. And
Right.
the same thing has to happen in communications, where they have to say, we want to find the answer to this question, and this is what we're doing about that, as opposed to, we just drilled all this out, and this is the data. That's answering questions that you had 6 months ago. It's important that you answered those questions, but in order for a project to be moving forward, they need to have new questions, and those need to be articulated. Wouldn't you agree?
I agree. There's, and it works both ways, Mike. It's a good question to ask a company to see, what answers are they looking for? But it's also a good idea for a company to ask an investor, is there anything that you want to know that I haven't given you? Do you have any unanswered questions? And is there anything that you'd like to know more about that I haven't mentioned? And, always try to clean those corners. So, yeah, I mean, it's important that it's two-way communication. It's also important that you're very cognizant of what investor perceptions actually are. And a lot of companies aren't very good at that. As you mentioned, I think earlier, is companies think they have an idea, but they don't really know. And so knowing your shareholders and your potential shareholders is just the essence of good investor relations and good communication strategy.
Fully agreed on that. Now, we work in an industry where, unfortunately, failure is a norm. You think you have something, you drill it, and what you think you have, it's not there. And therefore, you have to pivot to something else. How does a company communicate that pivot so they don't lose all their investors and have to start over from scratch? Because I see a lot of companies that, in essence, they overtalk their project. It's the greatest thing since sliced bread. All the majors are going to come looking for us. Drill, drill, drill. We have a thesaurus of words to describe dirt. And now we have to pivot to something else because this isn't going to work. We've broken this thesis. It's not valid, and we're going to have to pivot. Now, how do they take their investor through that pivot?
That's a question. It's a good question, but it's also important to understand that each case like that is has its own individual fact pattern. So if you're talking about a company that switches from being a gold explorer to being a rare earths explorer, or it changes some other way entirely, it's a tall order. If you have a good management team, before they get on board, they have a pretty good idea of what they've got. The thing that can often change is price of the commodity, where under any scenario imaginable, this property, if it ever becomes a mine, is not going to be profitable. If copper went back to 70 cents, Mike, I think you'd see a lot of the changes you're talking about. Okay. Which is, by the way, where I started in this industry. I can't believe $4 copper. That's like a dream.
I started at $280 gold. If I told them people it was going to be 1,000, they'd be dancing jigs in the aisles at the investor shows. And then if I told them that they'd be upset about it being 1,000, they'd look at me as I was crazy.
Yeah. Sure. That's right. And, but when should a pivot like that occur? A pivot like that can occur if prices for a commodity collapse. That makes some sense. It shouldn't happen because suddenly the metallurgy isn't going to work, or the geology is such that you're not going to be able to profitably extract whatever it is. Sometimes these changes happen just as a matter of fashion, and you've seen this. I'm sure you move from one commodity to another. The leadership of these companies tend not to be of the have made money multiple times in the past for investors type. You get management teams that are suddenly running an explorer who were formerly entrepreneurs in the exercise equipment industry. I've seen that. Those are where the pivots kind of happen. I think a real pivot is something where you need to sit down and seriously consider how to orchestrate that. And it's the kind of situation that I've been called into, not just in the mining industry, but in others, where a company in the specialty chemicals business is one case that I'm aware of, needed to shift gears from one class of specialty chemicals to another. And, it was largely a matter of economics and market opportunity, and that had to be explained. And an entirely new strategic plan rolled out to support that shift. So in general, if it's a real pivot for real and solid, unforeseeable reasons that even the most experienced team couldn't have anticipated, then it needs to be done in a very deliberate, orchestrated way. And you have to consider more than just investor audiences. You have to consider, in some cases, regulators. And you have to consider communities. You have to consider employees, of course. So it gets very complex very quickly, Mike, if a company is doing that kind of pivot.
Yeah, no doubt. Now, the other challenge that I see that occurs in our industry a lot of times is people, and this is actually a kind of two problems, but they're kind of interrelated. We talk to the drill bit. We just got all these drill results. Look at them. Aren't they marvelous? Woohoo, yippee. And then the other problem occurs is that we don't hear anything for another 6 months while they go back and figure out where they're going to drill next, get the funds to do so. And it creates a void and a vacuum. And as I've constantly have said, the markets are like a dog, they abhor a vacuum. They don't like it. And now you're getting outside noise that the company's not in control of over what could possibly be wrong, that we haven't heard anything since these drill results for 6 months ago. How should investors view that, and what could companies be doing differently to keep themselves in front of the investors when there's not new data coming.
Okay, and by data, you mean drill results, and it's important that investors and companies consider that there are really multiple channels for communicating different types of messages. There are messages that involve information, as you say, from the drill bit. There is other information that speaks to the company, even the management or its employees, involvement in the community. You have press releases that you can use to speak to the drill bit, but you can also announce a company's involvement in a local hospital. You have regulatory filings. You have the opportunity to do webcasts or podcasts like this, where you can demonstrate thought leadership. Just when the CEO gets up and talks, it doesn't have to mean that they're pitching the company as an investment. Sometimes it means that they're speaking to important issues within the industry. Our upcoming Current Trends in Mining Finance conference in New York in late May is such a conference. We don't have companies going one after the other, kind of giving their pitch for the company itself. You have CEOs who are coming in and talking about regulatory issues. They're talking about risk management. They're talking about all kinds of things that demonstrate that they have a grasp on the issues at hand in the industry. And it's important that investors look for this. Are they showing up at industry conferences? Are they on podcasts? Are they appearing and being interviewed in the industry trade media? Are there various opportunities for thought leadership? Are they on LinkedIn talking about not just their company and their latest announcement, but other things? So it's important that investors, when they look at a company, and it's important for companies to think about all the different channels they have at their disposal and the different kinds of messaging they can send. It isn't always about the resource. It can be about a lot of other things. And it's important that companies look smart, Mike, and that's really what this is about.
Yeah, and I believe that's one of the areas that we fall down as an industry is that we don't talk about the challenges that we face on a day-to-day basis. One of my flippant statements is if someone starts to over-explain something to me is I don't want to know how the hamburger's made. I just want it on my plate. But sometimes in our business, maybe we need to explain how the hamburger's made so that people kind of understand that and get it. But let's go to the other side of the coin. The investors, yeah, they're getting communications coming from the mining companies themselves, but they're also getting communications coming from people who aren't necessarily in favor of what the mining company is doing, the NGOs, environmental groups, in some cases, the governments themselves. How does a mining company counteract those types of things? Because, historically, we've just kind of shrugged our shoulders and kind of ignored it. And how does an investor also filter through that information? We're going to talk about how they need to do diligence on a company, but how do they do their diligence also on these groups and what they're saying?
It's important to put some perspective around this. When I started in the industry a few decades ago, the communication was far worse. In fact, it was so bad that mining companies in general just ignored it. They did not care about what the Secretary of the Interior, literally, the Secretary of the Interior at the time said about the mining industry. And I won't repeat it because then you'll know how old I am and who I'm talking about. But it was prior to NGOs, you actually had prominent government officials calling out the mining industry, and for good reason. I mean, there were practices then that you wouldn't even think about now. And the mining industry's come a long way. It's not the mining industry of the 1950s, 60s, 70s, even 80s. It has come a long way, and it's important to understand that. It's also important to understand that the origin of many of the groups today, the non-governmental organizations, are rooted in things other than a genuine concern for a particular species of fish or bird or insect or whatever that a project might affect. There are other aspects of these organizations that I think are beginning to come to light. For example, I had one client that had an opposition group in a particular location. I won't divulge that, but the root of that opposition group was twofold. One was from a competitor that used a different type of fuel to run a power plant, and the other was a foreign intelligence service that was attempting to disrupt the governmental process and other infrastructure of that particular location. You're going to see, and there are people like Adam Hawkins, who has done a lot of work on this through his firm. And in many cases, the NGOs are bankrolled and supported, literally, Adam says, by billionaires who don't want their view destroyed. They will find people who are opposed to a mining project simply because it's in an area that is considered pristine. Well, mining happens in pristine areas, and today we have methods to keep it from being a problem or an environmental issue. And these organizations are very powerful because they rely on emotion. There's a clear villain, the mining company. There's a clear victim, the species of trout or the local people. And there's a clear hero, which is the NGO and the folks standing up there with their signs protesting whatever it is. And what the mining industry has never been able to do, and I think it's changing a little bit now, and I'll go into that, is emotionally connecting with important audiences. And in many cases, the most important audiences are the ones closest to you. So you have a situation where you have a project that's going in. Who are you talking to first? You're talking to the communities. You're talking to the regulators. You're talking to community leaders. And you're starting there as opposed to talking to investment bankers. It's important that you get investors on board too, but investors, if they're smart, are looking at who else the company is communicating with. And that is beginning in some of these projects, Mike, to establish an emotional connection to the local community. They understand there will be jobs. They understand that this company and its leadership can be trusted. And they understand what's in it for them. They understand what is being said about these companies. This counter narrative from NGOs is just not correct. It's just not true. And it's in many cases even fabricated. And these organizations are just beginning to lose credibility. And part of the dilemma they face now is a lot of these minerals are needed for the clean energy that other NGOs promote. So, we can't have it both ways. We have to have mining. We can't grow it. We can't grow. We have to mine it. So we have to do that responsibly. And the best NGOs are and there are very few, but they promote a balance. Not all do, but I think many are moving in that direction. There are some that are just going to be radical bomb throwers, regardless. And I don't mean that literally, but just people that are going to be disruptive regardless. But I think that the credibility of these groups is actually starting to decline. And it declines because companies are able to connect emotionally with their most important audiences. What you don't want is, in some cases, and you've seen these, there's an issue with a company and their response is, well, we got to give everyone the facts. And so they do a video of a man in a suit in the boardroom laying out the facts for everybody. It's absolutely zero emotional connection. If you want to connect emotionally, do a video about what's going on in the community and what the people in the community are benefiting from. The I am mining campaign that has been promoted in recent months is a perfect example of that. And it takes and puts it at a human, kind of in a human context as opposed to a technological context. But that emotional connection is key, and it's the only way we're ever going to defeat this negative counter narrative.
Yeah, I don't disagree with that at all. In fact, I go to let's talk about ESG or the social part of the ESG equation, and everyone wants to know what are you doing? Where's your community engagement? And the reality is beyond just engagement. Like we have the Aboriginal miner inside of the Prospector News, and when I talk to First Nations people that are pro mining, at the end of the day, one of the reasons that they're pro mining is that their kids have an opportunity to live and work in their community without having to leave in order to have a proper living. And it's, yeah, that's a First Nations community, but it's like that for all communities. Like at the end of the day, parents that's what they want for their kids. They want opportunities for their kids to have a successful life, and at the end of the day, also they're a little bit selfish. They'd like the grandkids to be kind of close by, so it's not outside of the realms that when we're talking about ESG, it's not, oh yeah, we had meetings in the local community hall. It should be about what are the members of your company that are living in that community? What are they doing? Are they volunteering, teaching kids, sports and arts? Are they a part of a local band? Are they part of the local chamber of commerce? Are they sitting on big committees and boards within the community itself? Are they, if most mines are in remote rural areas. Are they members of the local volunteer fire department? These should be the conversations that the companies are having about their social engagement, not exactly what you were saying, a guy in a suit saying, oh yes, we met in the local community hall with 50 members of the community and they all seem to be okay with us.
Yeah, and you don't do that. My advice to clients is don't do that. And it's kind of a almost technocratic method of communication, and it just doesn't work. It didn't work very well back when it was started, which I literally want to point to the 50s and 60s. Let's speak truth about blah 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 blah. And it's just nonsense. Today we have much better tools. We have a much better understanding of how to connect with audiences. And what you just described is a great way to do that.
Now, how much of our problems in communication actually rest on the fact that it's one-way communication? It's somebody standing up and, giving the corporate presentation deck, a speech, doing the same in the community, doing the same when they talk about NGOs. Is that a predominant thing that's getting us into trouble? That we lack two-way communication?
I think it has, but again, back to quality of the leadership of a company. The best leadership of a company has that two-way communication. And it should be to an investor just looking at, what does the company have on its website? Does it talk about, does it show employees and members of the management team talking to the community, hearing the concerns of the community? There's evidence that an investor can find of that two-way communication. If you don't see it, talk to the company, ask them about it. give them feedback. And if they're a good team, they'll listen. If they don't listen, that's a red flag.
Yeah, exactly. Now, investors, how should they be doing their diligence? We tell investors, look, it's your money, you're responsible for it. What
Right.
kind of due diligence should they be doing with us as an industry, the environmentalists, the NGOs, our opposition as a group, so that they can kind of form an opinion as to what is real? Like I come across it and I shake my head. Again, we deal with the Aboriginal miner. I'll have a company that'll flat out say, "Oh yeah, we have excellent relationships with the local First Nations community." I pick up the phone, I call the local First Nations community, and believe me, they don't have any good things to say about the company. And it's just like, did you
Mm-hmm.
think I'm not going to check and find out? But in fairness, the company actually probably believes that they do.
Mm-hmm.
So how does an investor kind of separate that wheat and chaff?
Yeah, well, first of all, Mike, it depends on the magnitude of an investment and how much time is warranted for due diligence. If you're buying 100 shares of the company and just seeing how it plays out is one thing. If you're taking a significant position for you in a company, then there is a lot of due diligence you should be doing. I think um, if if you can and you should be able, talk with someone on the team. And I don't mean the investor relations officer who does investor relations for 5 different companies on the Toronto Stock Exchange. I'm talking about someone who's actually making decisions. It's not a bad thing to talk to the professional IR consultant up front, but ultimately, if you're making a significant investment, you'll want to be talking to the management. You also want to look out and see, are there any videos of the management talking to investors? In a Google search, what are you coming up with in terms of media coverage of the person, the project? There are many different avenues you can take, but what you want to be sure of is that there is a fulsome investment narrative there and that it has all the elements you need. The management team and the reputation is absolutely 100% the most important consideration you have. Is the company stable? What's its market position? Is it one of a million companies of $10 million market cap, but nothing that really distinguishes or differentiates it from the pack? You got to look for that. How differentiated is this company? A lot of times companies aren't worth looking at, Mike, as you know, because they just aren't differentiated. And that's something where, as an investor, understand you have lots and lots of choices out there. You don't have to go with something because it's near where you used to live. Some people invest on that basis. But if you're making a significant investment, you have to do your due diligence, and it starts with the management. And try to meet them, try to talk with them. And if they're unavailable to you, that's a red flag.
Yeah, again, piece of advice I give everybody is, pick up the phone, call the CEO. If they don't call
Mhm.
you back in a timely basis or a senior member of their team, because sometimes the CEO just isn't available, but you should hear back from somebody from the company. If you don't
Yes.
hear back from them on a timely basis, there's lots of other opportunities out there, and maybe this isn't the best one for you. But
Right.
sometimes, as you know, there's two rules in life. Rule number one is shit happens, and rule number
Yep.
two is you can't prevent rule number one. So when things go sideways, there's a panic that goes with it. Depending on the nature of what's going wrong, it can be just at a company level, or it can be at the entire industry level, aka what happened with the earthquake at Fukushima a number of years
Right.
ago. As an investor, How do you manage to avoid a panic situation where panic maybe isn't necessarily warranted? Or, in other words, how do you keep your head in crisis?
Yeah, okay. I think as an investor, and it same holds true for a company, you have to define what a crisis really is and what its impact might be. You look first at the severity and urgency of a crisis. The Fukushima example is the extreme, certainly. But just because some rando on Twitter decides to call the CEO a liar, some guy with 5 followers, does not require that the company marshal a response and set the facts straight. So as an investor, you can do this. You can look at a situation and say, is this a crisis or is this not a crisis? The impact of the situation, is it widespread? Is the situation widespread? Is it significant? Is it affecting multiple areas of a business? Or does it have limited impact? Is it confined to a specific area? Two guys getting into a fight in the lunchroom on a property does not constitute a workplace violence issue. But, a workplace violence issue can be, a very serious situation. And then you look at the responses. A crisis, you have to have a coordinated, swift response, and that has to be planned for. But not a crisis, sometimes you can just ignore things. And this is something that I know retail investors react to a lot, is something said on social media like stock twits or some other blog. Not always a crisis. And you look at the cause. Is it unexpected, unforeseen events, or is it a routine issue or challenge of some kind? You always have to look at it through that lens. And there are real crises, and how a company responds is something you should look at as an investor. There are 10 things I tell companies never to do in the crisis. For example, one is to just run silent and not say anything at all. If it's a real crisis and it kind of goes through the smell test that I just described, the 4 different measures, severity, impact, response, and cause. If they're running silent and not saying anything at all, even to the people who are directly affected, that's a problem. Getting out there and making your voice heard and using lots of pictures, video, numbers, things like this, that's not a great way to handle a crisis. That is something you just don't want to do. Or pointing a finger at a worse offender in the industry. If you see the CEO of your invested company, the company you're in, doing that, get out. Because that shows that they absolutely do not have a clue what they're doing. Some companies, also believe that a crisis is forever. It's not. Sometimes they think it's already over, and it's not. So there are just things you want to look for to how a company is responding to crisis. I could use the analogy of our current administration. They create crises almost on a daily basis. How do they respond? You go from the art of the deal to the art of the backpedal. That's not a sign of good leadership, let's say. If you got a company that's doing that, you probably shouldn't own it.
Yeah, but you also have to take into account, let's go back to the Fukushima example again. Yeah, it was not a good thing for that particular reactor, and probably not a good thing for examining reactors in Japan, given its, where it's located. But there was an awful lot of overreaction, like Germany shuttering their nuclear reactors when they weren't anywhere near any fault lines, and their reactors were working perfectly fine without any problems. So sometimes a crisis isn't so much how the company reacts to it, but how others react to it as well. So how does an investor deal with the bigger picture when everyone is blowing the crisis up to be bigger than what it is, too.
Well, you're seeing some of that today in the market, over the past several weeks, where the market swings exemplify that kind of reaction. And, that is where investment skill starts to pay off. Should you look at your portfolio, you look at what is most affected by the situation. Maybe you move a little bit to cash. If you're talking about a particular stock, it's very difficult to know, but it depends on how much due diligence you've done, how well you know the management, if you're talking about a particular company. And everybody's losing their mind and they're selling the stock and it's down 50%. If you know and understand the company well enough, you're not going to worry about it. Or if you know and understand the company well enough and the shit's hitting the fan, then you sell. But it all comes down to how well you know that company, which is a function of your due diligence and your assessment of the quality of the company and its communication, because it's the only way you really get that understanding.
Yeah, I guess again that goes back to that emotional attachment you have to the company and their success, predicated on that as well. So
To a degree, it does. And not to say that investing should be an emotional exercise, but it's part of it. If you have a good rapport with the principals at a company, that it can help you a lot. It can also hurt you, and I've seen this in cases, where I knew someone who had a large position in a company that was beginning to be accused of malfeasance and things. And this is a guy who was a billionaire, had an investment in this company, a significant chunk of the stock, and eventually the company went under because the principals were accused of crimes and convicted of crimes. And he lost a big chunk of his net worth. Now, he's still a billionaire, but it hurt. So you have to be careful of that emotional connection. You always have to be able to step back and say, are these guys following, what I would think would be a proper response? And, in the case that I just mentioned, they really weren't. They were simply getting up and denying everything, and it turned out to be true. So, it really depends on how well you know the facts and how well you know the people involved.
yeah, it's the old standard. You interview people that knew the serial killer, and they go, "I don't believe that he could have possibly done that. He seemed like such a nice boy." So,
Exactly. The other thing that I would say, if from an investment standpoint, is be ready to move on, and don't worry about it, and just throw it over your shoulder and don't look back. You probably heard that expression, and you have to be ready to do that. Don't get so emotionally attached to something that you'll ride it from a dollar to a penny.
you have to be within reason of these things. But again, it's all about communication and it's about two-way communication. You need to be able to pick up the phone, ask the CEO, hey, what's going on here? What's your plan to get out of it, etc. And decide then if you like the answer or not, or even decide whether or not they're being invasive about how they're answering that question. So
Yes, and you want to look for certain indicators of good communication. That's always a good sign. And if you see things happening that deviate from good best practice communication, that should be a red flag. Just if only you're looking at communication. You could have the best property in the world, but if a company is not clear about its communication and the management reputation isn't where it should be, it won't matter. So always try to use your checklist. I mean that communication is one band in the spectrum of things you need to look at as an investor, but you need to look at it carefully, because companies that communicate well, clearly, honestly, transparently, it's generally indicative of good management, which is the key to success in any investment.
Here, here. You and I, we got some events coming up very soon.
Yes, we do.
First, one of the things that we talked about in this about not talking just to the investor relations person, but actually talking to management. I would highly recommend. If people are listening to this and they have the availability to go, there's an event in Quebec City, Canada, on June the 3rd to 5th called The Mining Event, and it's an opportunity for you to sit down with the CEOs, CFOs, and actually talk to them about the things that Al and I had discussed as far as communication, planning,
Yes.
and where a company's going, as opposed to getting it from an IR professional who's, as you
Mhm.
say, maybe representing more than one client. And then there's you and I's, what I would call a non-investor event coming up in New York City from the 19th to the 21st of May. It's
Yes.
put on by the New York chapter of the SME, which you're a board member, if I remember correctly. Why don't you
Yes.
tell us about that really quickly, Alan?
Sure. This is our 10th year. The conference is Current Trends in Mining Finance, and it has evolved from a relatively small gathering to now an event that hosts maybe 300 or so people over the course of 3 days. The first day comprises workshops, and then the next 2 days we're hosting several, two tracks actually, of roundtables and panel discussions and things all around major issues, things like risk management, or even some technical issues, resource definition. All of it designed for people that aren't a mining engineer or geologist. I mean, investors get a lot from this, and we do have investors show up to this because they learn a lot about how the industry thinks about things, but they also get to meet some of the principals involved. And I'll tell you that the best management teams are the ones who show up to these things. And it's a very good event. It's held at A&O Sherman offices. They have a conference center in New York, right there on Lexington Avenue, and in Sherman, A&O Sherman, they merged, the two firms merged. They're a very large global firm that does a lot of work in the mining industry. We're also co-sponsored by the province of Quebec and the Society of Mining, Metallurgy, and Engineering. We've got really good sponsors. Some of the major engineering firms are there. And why is that important for investors? Well, because you can talk to some of these people and they can tell you a lot technically about what makes a good project and a not so good project. And we have panel discussions about that as well. So a very good educational experience, Mike.
I agree with you wholeheartedly. I've been going now for the past 7 or 8 years. I learn new things every time I go. Apparently, I've learned enough about enough things that I actually get to host the odd panel and discussion from time to time. This year, I'm hosting one on mining technology that should be quite interesting. We've got some AI experts sitting on the panel. We've got some preeminent geoscientists coming up from Australia from a company called Index that'll be sitting on that panel, as well as a couple of
Yes.
other CEOs that have utilized technology to advance their projects nicely. Pre-event, I'm going to be recording an economics discussion between Dr. Mark Faber and Felix Zuloff to discuss the current state of the economy as it relates to commodities and mining stuff. And I believe I'm actually sitting on a panel with you talking about talking. So
Mhm.
I've got a pretty heavy schedule there. Plus, I'll be recording some podcasts with some of the experts that'll be in attendance, and those will be released over the weeks following the following this event. So I look forward to seeing you in the flesh in New York at that time.
Yes.
So thank you very much for joining me today. And as I say, I look forward to seeing you in New York in a few weeks.
Thank you, Mike, and thanks for having me on your podcast. I genuinely appreciate it. Thank you.
The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.